This is the AI News Flash for May 25th, 7 a.m. UTC. First up, CNBC reports in an exclusive analysis that the real driver behind rising U.S. Treasury yields is AI capital expenditure, not the Iran war or energy price spikes, marking a decisive moment as top Wall Street analysts now openly state this view. The combined $725 billion AI infrastructure capital expenditure by the four major hyperscalers for 2026 is triggering record-breaking corporate bond issuance. Amazon's $50 billion largest ever bond offering, Alphabet's €17 billion debt sale, Meta's accelerated debt issuance, and Oracle's $30 billion AI data center financing all represent unprecedented capital market absorption by big tech. Jefferies notes U.S. economic dependence on AI-related capex has reached historic levels. Morgan Stanley estimates $2 trillion in cumulative capital needs from 2025 through 2028. S&P's negative credit outlook revisions and liquidity concerns combine to make AI investment sustainability the most critical macro test of the cycle. Amid institutional investor AI bubble, concerns intensifying with Michael Burry's $1.1 billion put position, Norway's sovereign wealth fund 35% loss risk warning, and Bridgewater's dangerous phase warning, the structural tension between AI capex and bond market capital is emerging as the most important macroeconomic turning point for the 2026 AI investment theme. Next, FinTech Futures reports that AI startup Primitive has officially launched an AI agent operating system specifically built for financial services, marking the financial AI industry's full-scale transition to the agentic AI implementation phase as a symbolic case reaching a decisive moment. Primitive's new platform targets banking, insurance, and wealth management institutions, providing a framework where multiple AI agents autonomously coordinate to execute customer service, compliance monitoring, transaction processing, and risk assessment workflows. Legacy financial system integration, regulatory compliance, and data governance form the three pillars of differentiation. Amid intensifying enterprise AI agent market battles with Salesforce Agentforce, ServiceNow AI Control Tower, Microsoft Copilot Studio, SAP Autonomous Suite, and Google Cloud Agent Space, Primitive's strategic decision to focus on the financial services vertical represents a noteworthy symbolic case in the industry. Against the backdrop of accelerating global financial sector AI adoption with JP Morgan deploying LLM to 200,000 employees, Citi integrating Gemini, HSBC cutting 20,000 jobs, Morgan Stanley reducing 2,500 positions, and Standard Chartered's transformation, a financial vertical AI agent OS positions itself as the most important emerging player in the 2026 enterprise AI market as a key milestone. Then, Kalkin Media reports that cloud content management giant Box is facing significant stock price pressure on the NYSE Composite Index amid the broader AI shift emerging as the latest case study in the SaaSpocalypse trend and symbolizing the industry-wide structural transformation at a decisive moment. Box is attempting to pivot from traditional cloud storage and file sharing to next-generation content intelligence platforms for the AI agent era, but faces fundamental disruption pressure from AI-native emerging players threatening established SaaS business models. The proliferation of agentic AI autonomous workflows creates structural risk that the per-seat licensing model itself may collapse. The IGV Software Index has declined substantially year-to-date, with traditional SaaS names including ServiceNow, Salesforce, Workday, Atlassian, and HubSpot all under pressure. In contrast, second-phase AI infrastructure beneficiaries are surging, creating a polarized landscape where institutional investors are entering a serious selection phase for Box's unique positioning. Amid the hyperscaler $725 billion 2026 capital expenditure boom, accelerating usage-based pricing migration driven by agentic AI adoption, and the clear divergence between AI repper companies and genuine AI-native SaaS, Box's AI pivot success becomes the litmus test for 2026 SaaS industry structural transformation as a critical milestone. Finally, Let's Data Science reports in detail that the open-source security expert community OSS-Sec is now engaged in a serious debate over coordinated vulnerability disclosure risks involving large language models, signaling a new dimensional challenge in AI security governance at a decisive moment. The core issue is whether traditional responsible vulnerability disclosure processes can keep pace with machine-speed autonomous attacks now that AI models have acquired the capability to autonomously discover zero-day vulnerabilities and construct chained exploits. Anthropic's Mythos model has demonstrated vulnerability discovery capabilities exceeding human security experts in both speed and accuracy. With the closure of Curl's bug bounty program surging low-quality AI-generated vulnerability reports overwhelming maintainer triage capacity, and 48% of security professionals predicting agentic AI will be the largest attack vector in 2026, all point to structural fragility emerging in the open-source security ecosystem. Amid accelerating global AI cybersecurity governance framework formation, including Google GTIG threat intelligence reports on nation-state AI weaponization, Cisco LLM security standardization, G7 AI SBOM guidance, and U.S. Department of Defense AI model security baselines, this moment positions as the most important turning point for AI security governance in 2026 as a critical milestone. That's all for this AI News Flash.